Good evening, friends. I think there is a clear-cut case of bull and bear. I basically at the loggerhead, no one wants to give an inch to the other guy, and that's why on one day we have a khushi, another day we have a gum kind of a stuff. Market is down extremely volatile. It does not give any indication which direction market wants to move in. I'll show you with some data which is very interesting. But before I begin my presentation, small disclaimer that this webinar is just for education purpose. Please consult your financial advisor before buying, selling any stock. Remember, investment in securities market are subject to market risk, and hence you should be aware of the risk that comes when you invest in the equity market, and past performance is no indicator of future returns. Now, if you look at, I was looking at the data and I was a little surprised, there are total 31 days in 2024, up tak, including today. When I say 31 trading days. And out of that, on 7 days, market has moved more than 1% on either side. If you look at it on 12 Jan, it gone up by 1.18%, on 15 Jan 1.05, but 17 Jan 2.23, 23rd January 1.47. So if you look at the data, which clearly says that market has been a little choppy, and due to that does not give any indication which direction market eventually wants to move. There are different school of thoughts that are suggesting different kind of stuff. And hence it becomes extremely difficult how one should navigate this market. If you ask me also, one of the best way to go about doing is that kuch mat karo. Shanti se, because you don't know what's going to happen. Sometimes when you are confused mind, you should not do anything which creates a problem little later stage, am I right? Or you go to the expert who understands the market well, and he should be in a better position to preserve your wealth and then create the wealth. But I must tell you one thing very loud and clear. If you are not careful in 2024, probability is very high that whatever wealth you must have created in last year, that is 2023, can get wiped out. Because market is going to remain little choppy, as the data suggests right now. And hence the kind of money that we have made in 2023 are not going to get to be seen repeated in 2024. And hence my request to all of you would be, please be careful what you are doing with your equity investment. I know sometimes, we all love momentum, and something is going up, we want to go and buy those companies. But remember, that also comes with a lot of risk. And if you are not nimble-footed, probability is very high that you may end up having the stock in a portfolio which will take years to come back to the price at which you bought it. So very, very careful. Now coming to the inflation, and I think the good news is that India's inflation has come down. It was, if you look at the data, and which we have discussed enough, in October it was 4.87. It came down, it increased to 5.55. It increased further to 5.69. And after this, third month, now it's come down to 5.1. But we are still higher than what it was there in the month of October or in the month of September. So yes, 1 month it has come down, but do we need to get cheerful about it? The answer is clearly no. What you see on the left-hand side, that 5.1% is for the whole India, am I right? But there are certain regions where the inflation is much higher. As you can see, this region, 7.55. If you look at Gujarat, 6.21. Okay, I think this must be what? 6.24. These are the region that, like you look at Karnataka, 6.11, kind of stuff. The Madhya Pradesh seems to have a very the big state, but having a very low inflation as compared to India. So this 5.1% is an average for all India. There are certain pockets where the inflation is high, and there are certain pockets where the inflation is low. It's depending upon which part of the country you are, and that's going to decide how much it's going to pinch you in terms of this inflation. Just to reiterate what Shaktikanta Das said in the last MPC policy, that clearly India's inflation for FY 2025 is going to be at 4.5% for the full year, which is still above the comfort level of RBI, that is 4%. And hence, the debate is there, not only in India, globally, when and how soon and how much quantum that we should expect the rate cut. And that debate is there on a daily basis. No one has a little clear handle on when and what can happen. Now, if you look at last 1 week, that is from Wednesday to Tuesday, it's not been a very great week for the investors. Why? The Sensex was down, Nifty was down, the small cap was down by 4.4%. Okay, the mid cap was down by 1.5%. If you remember, till such time, the mid and small cap were outperforming the large cap. But this week, for a change, both mid and small cap came under heavy selling pressure. Maybe profit booking, whatever you want to call it. But PSU Bank and Pharma, they've been rock solid in this volatile time. Also, in fact, if you look at the data on the PSU Bank, they did extremely well in 2023. They continued their journey in 2024, up by 18% or so. Pharma is again up by 11% or so. Realty index has seen some amount of a softness. If you can see here, the realty index, where I saw realty index here, okay, in this it's not there. Okay, there, 1.8% was down for this. It has given up some of the gain, but still up by 8.6. Infra continues to do well. IT, there's a more technical reason for IT to do well. Why? Because the banks and Bank Nifty and Bank Finance are not doing well. So HNI investors, the FII investors, normally they balance between IT and the banks, because these are two sectors, they can absorb a lot of money. So our sense is that some amount of selling pressure that is happening from FII is basically getting parked into the IT sector. That's why you see IT 7.6. We all know that Cognizant came out with the outlook for 2024, and it's not very great. If you look at the commentary, and we did discuss in one of the webinars, that commentary doesn't look so great, but yet IT continues to be holding up very well. YTD mid cap is up by 5.2%. If you look at it, small cap is up by 3.8%. That means what? The mid cap outperformed the small cap in 2024. The only thing which has happened in last 1 week is that the delta between the mid and small cap versus the large cap has come down. Why? Because the small cap fell by 4.4% in just 1 week. FIIs, till last week they were net positive, but when I look at month to date for February, they are down by 2,500 crore. This is on the top of what they sold in the Jan 2024. So FIIs are on a continuous selling spree, and that's one of the reasons why we see market been some amount of volatility, the tug of war between the bull and the bear. India, we are absolutely on the fag end of this December quarter. In next 2 days, the data would be, almost everyone would have declared the numbers. Till now, the data which has come is near about 360 lakh crore, and India's market cap is near about 380 lakh crore. So, if 20 lakh crore wale company, total 20 lakh crore ka baki hai aana, which is not a very significant of overall market cap. And when you look at it, net profit continue to remain quarter on quarter negative, and Y on Y, it's up by 26.3%. I would have preferred 4 to 5% net profit growth on quarter and quarter. And based on what the data which has come out till the company that's been declared, maybe you can say for this for India Inc. also now, we are trading at trailing 12 months PE of 24.9, that is 25 by 25x. We are no longer in a cheap territory in terms of price to earning, but we'll discuss some other day about that. With this, let's open the floor for question and answer. Mahesh is saying, please suggest entry and exit strategy in the current market condition. Sir, please use our score available on the website, MarketsMojo.com, and that's the best way you can decide entry and exit on the stock. In PMS, we have a different IP, and there we are basically making entry and exit based on that. What is your take on paper news? Why results are so bad? Is it due to the much supply of lower demand? So I think if you look at the commentary that has been given by some of the paper companies post numbers, whether it's ITC, whether it's JK paper, Andhra paper, West Coast paper, so they don't do con call, unfortunately. But what is available in the post result press release is that demand has been little low. Import has been there for some of the Chinese companies, and that due to that, and the prices have been little low. That's basically impacting the performance. That's what the sense we are getting in from the paper companies. So the performance has not been so great for most of the paper companies in Q3. Lakshmi saying, hi, hope you are having a good time and enjoying your life. I always enjoy my life, sir. And when I talk to you people, there's a thrill to discuss with you people. I would like to understand one thing. There is this market correction, profit booking situation. Mid and small caps are falling like anything. If we have good stock in profit, should we book profit or hold for long term? One of my stock was in 240% profit, but is now lower circuit since the few days. And luckily, I got a chance to come out today with only 100% profit. Oh God. Still I have a good mid-scale small cap which I buy, strong buy, but they are falling. Should I book profit or be patient? Thanks. So Lakshmi ji, I think there is no blanket, formula कि ये कर लो. My advice would be look at the company that you got in. Look at the fundamental story. In my personal portfolio, I would have a company which has gone up by 800% also. It could be small cap only. But I may continue to hold because I believe that this company can outperform. So you need to look at the reason why you hold that company. And if that reason continues to be there, there is no need to panic and get out. Now, we all want to get out at the top of the price. And that's a wish everyone has. We want to buy only at the bottom of the price. कि हम लोग जिस भाव से ले उसका प्राइस गिरना नहीं चाहिए और हम जिस भाव से बेचे उसके पास प्राइस बढ़ना नहीं चाहिए. But that's not practically possible. So sometimes you need to understand, you need to respect the market sentiment and see that. So always keep telling investors, look at the company that you have. Is the story still intact? Reason for which you bought? If yes, please continue to hold. If the story is no longer there, forget about booking profit. Even if you book losses, please get out of that company because loss to loss, लेकिन निकल जाओ उसमें से. And that's what you should be doing. So my advice would be, Lakshmi ji, there is no standard rule, especially for you because you people don't have too much resources at your end. Okay, you don't know how the IP works, and hence my advice would be, why you bought that company. Now, if you say I've used MarketsMojo as a score, just to give you an example, so as long as the MarketsMojo score says buy or hold, please continue to hold. If it sells, or the score is below 60 and its script is falling, please get out of that company. That's the best way you can do that. So, or if someone give you tips, for example, then go back to that person who give you tips and said, boss, तूने मुझे दिया था, the script moved up by 240%, now it's 100% only up. Should I lock in profits or not? That's another way you can look at it. So definitely you should have a reason. The reason, does it still hold true or not? And that's the logic you should apply. It's a very simple formula, but we don't want to do that. We are a little lethargic in terms of following that process. If you follow that process, I think you should be fine. How to find the order book size of a company? Is there any specific site or link to get the order book size, Madhusudan ji? So, sir, I think you need to go through the company's PPT, each company PPT. where they do give what is the order book size for the infra companies. But if you want, maybe for the benefit of everyone, maybe we'll try to compile order book and we can send it to you people. Is there any specific site which or link? I'm not aware, sir. Normally, what I would do, I'll go to the each company's presentation and look at the order book size, and basically that's how I would do it. But there may be site also, I don't know. I'm not aware about it. But this is the way you can do that. But if it's a good, Amir just remind me, we can put this in our Thursday Future Trend series. We can put this as a slide. Empire return is mode of what is almost. So Sagar sir, your question is very, very long. So I'll give you my practical what I did. And I'll give a classical example. Situation like 2008, situation like COVID may come. When it will come, I don't know. Whether it comes in 3 months' time, 6 months' time, 1 year time, 2 year time, we don't know. That's why it is called Black Swan event. Am I right? Otherwise, it would have been called Grey Rhino event, which you know, but you did not discount it. So this is a Black Swan event which you don't have a control. You don't know when it will come and when how badly it will hit you. And that's where the market falls very, very substantially. Why? Because market was not factoring in and suddenly comes out of a blue. Now I'll give you my example. So there was one company which I was holding called Orient Paper. I bought that company, market crash. Now, ideally, in a hindsight, one should have said, boss, nikal jana chahiye because you got an opportunity to buy another that same company at a lower price. वो तो होता नहीं है because you can't time the market. You don't know where the bottom is. Am I right? And hence you would. I did not get out of that company. Now, reason for me to get into that company was very obvious that this company was having, apart from paper, Orient ka pankha, Orient Electric, and Orient Cement. And my understanding was that this company will eventually get demerged into a separate company. And eventually this company did that. So reason why I bought that company was continues to be there. And I'm giving you a live example. Why I'm giving you a live example? Because you people understand and you can relate to it. Eventually this company first got demerged into Orient Cement or Orient Electric. I'm forgetting the order. And then they also, and you got shares of the company. So by holding in one company, you got 3 shares. And when you look at the sum total of that, one made a bountiful return. So yes, the script did move down. But then when you look at Sagalji over a period of that time, you made bountiful returns from that same company. Am I right? So that's why I say reason should be very clear cut. I'll give another example. I had invested in Bombay Burma. Why did I invest in Bombay Burma? It's a holding company for Bombay, Britannia, sorry. It is a holding company of Britannia. मुझे अभी भी याद है 72 rupees का भाव था. And then they give a bonus of for every 2 shares 1 share. So मेरा cost होगा 48 rupees का. It did go down when the market crashed because I invested in 2006 if my memory serves me right. It did crash. Did I exit? No. Why? Because my reason for to invest was that interesting world था उस कंपनी में तो पैसा बनेगा. और फिर पैसा बहुत तगड़ा बना. So that's why, and the reason I'm giving you company name, just to drive home the point, that there could be corrections because of that Black Swan event like COVID or 2008 global financial crisis. That event can come, but eventually, since you have the strong reasoning why you bought that company, that story is going to play out. Maybe what can happen, the story may play out by 6 month delay or 1 month delay, 1 year delay, but story will definitely play out. If that's going to be the case, then why to exit? And then you make bound to, because फिर क्या होगा आप ले नहीं पाओगे. See, it's very easy to say, अरे बेच देता आपको तो मौका था नीचे लेने का, पर होता नहीं है रियल लाइफ में. So that's the thing. Now second part of your question is that to protect the capital, what should you do? Am I right? That's another question. Should you put fresh investment in existing model portfolio? Can we hamper your return as a model portfolio is almost 1 or 2 years? So you can definitely put fresh money in existing portfolio only if you wish to do that. Only thing which we have been advising time and again in the beginning of 2024 is the very simple. If at all you want to put it, please take out your investment in a period of 2 months, in 3 equal installment. That's what you should do. Will it hamper your investment? Answer is no. That's not the way it can do that, sir. So I hope I've answered. In case if I have not been able to articulate properly, Sagaji, please put your question again and I'll be more than happy to answer. And I will please take it in case if I have not been able to articulate my thoughts very clearly. But remember, one thing एक दिमाग में से निकाल दो आप लोग सब कि मैं टॉप मोस्ट भाव में बेचने वाला हूँ और मैं बॉटम भाव में लेने वाला हूँ. ये सिर्फ बुक्स में होता है, वो थियरी में होता है, रियल लाइफ में कभी नहीं होता है. मुझे कोई इन्वेस्टर आज मिला नहीं जो माइका लाल ये बोल सकता है मुझे कि मैंने हर वक्त जो स्क्रिप्ट लिया था ना वो बॉटम के भाव में लिया था और जब भी मैंने बेचा है टॉप मोस्ट भाव में बेचा है. कोई नहीं बोल सकता है वर्ल्ड में. हिंदुस्तान की तो बात छोड़ दो, वर्ल्ड में कोई नहीं बोल सकता. जब वो नहीं कर पाए तो आप कौन से खेत की मूली हो? Am I right? So accept that fact. Once you accept the reality now, the life become easy. And yes, market will go up, market will go down. It's the nature of the market. You should not get perked up only. In fact, today there was one investor who came down to our office. He's a PMS investor, and he basically invested in our PMS. His son is 7-8 years old, and he want to when the son becomes 18 major and he want to fund his graduation. He said, I'm investing X amount and I want to grow this amount to so and so. Is it possible? And I said, yes, but don't look at the portfolio on a daily basis or monthly basis. I hope he's attending this webinar, and told him very clearly, because क्या होता है हमारा nature क्या है, when we see the market down we get little emotional and we want to exit from an assets class, or when the script goes up, like the portfolio goes up substantially high, we become greedy. बोलता बॉस निकल जाओ अभी, पैसा block in कर लो. But then power of compounding will not work, and then when the power of compounding does not work, you don't create the wealth that otherwise you should be creating on this. So Sagar ji, my advice would be, again go back to the basics and see. This is why I say, if your fundamentals are clear, your logics and concepts are clear ना, life में कभी दिक्कत नहीं होती. I'll give you another classical example. I'm not boasting about myself, but I must tell you. So in my 12th HSC, हमारे यहाँ पे HSC को 12th बोलते हैं महाराष्ट्र में, there was a mathematical paper, mathematics, and normally commerce students के लिए maths is always option. It's never been the otherwise. You go for secretarial practice in the commerce stream. For science it was always a compulsory. 12th में maths compulsory था, हमारे commerce के लिए नहीं था, and I was a BCom student. So I appeared for the exam, and my paper got over in 25 minutes. 3 घंटे का paper, 25 minutes. Now I could not step out because the rule says you need to be minimum in the classroom for minimum 30 minutes. So I had to wait for 5 minutes more. What else can I do? So I 30 minutes जैसे हुआ, I gave my paper and I stepped out. Some of my friends looked at it and they were feeling very sorry for me. कि बंदे का पेपर बहुत खराब गया है, बंदा ये हो गया. And I started preparing for my next paper. Next day exam था मेरा 12 का वापस. And this people met me in my library. He said, सुनील क्या हो गया, इतना पेपर क्यों गंदा क्यों लगा था? बोलता नहीं गंदा नहीं था, मेरा पेपर खत्म हो गया तो कर दे. लेकिन खत्म क्या कैसे हो, हम लोग को 3 घंटे में नहीं हुआ. तो I said, very simple statement. If your concepts are clear, then nothing is challenge, am I right? Because वो हो गया. And you'll be surprised to know that I got 98% in that maths paper. Despite others took 3 hours and still could not complete, I completed with 25 minutes and I got 98%. So I said simple concepts should be clear. The same logic applies in our equity market. If your concepts are clear, then what looks very unsurmountable problem becomes a very easy problem. But problem क्या है? We want to jump from one strategy to another strategy like a monkey. एक पैर से दूसरे. Because we are not very clear in terms of our thought process. कि हमारा thought process क्या है? You laid down your thought process. This is what my investment strategy is, and I'll stick to it come what may. और जिस दिन आपने वो stick कर लिया उस investment process को, you are fine. Of course, I'm not saying you can basically modify it based on your experience, but you don't jump from one to this to this to this, and then you will never ever make money. And if you go back, those investors who have not made money, and आप थोड़ा analysis कर लोगे, आपका postmortem कर लोगे, आपको पता चलेगा, you did exactly the same. You did not have a proper strategy, clarity of thoughts in terms of how to go about it. You jump from one method to another method to another method to another method, and that's why you did not get the wealth. Nimesh, JP Morgan predicted 20 to 30% for, especially in 2004 in their recent report. Then portfolio down 34, really scary. Sir, please answer and guide. So Nimesh sir, you all know that we don't comment on other people's prediction. They may be right, they may be wrong. We don't comment on them. What we can comment on our presentation. What did we say? So we have a very good track record, touch wood, in terms of predicting the market. And in beginning of the year, Nimeshji, we came out with our yearly guidance. Then we did mention that 2024 is not going to be the easy year to make money. We do expect market to remain range bound with the downward bias. That's for the large cap, Sensex and Nifty. We did mention that we will not make the same kind of money from the mid and small cap in 2024, but mid and small cap will continue to outperform for the full year. There will be a period where the mid and small cap can underperform. For the full year, that's a point to point, mid and small cap will give positive returns better than the large. So they will outperform the large cap. That's what our house view. We don't believe we need to change our view in the mid of Feb. We continue to stick to our prediction, what we have predicted then, and we continue to make the same prediction even now. I hope that gives you answer. Again, you can ask me in December 2024, and we have a very bad habit. We also showcase, because people have a very bad memory, am I right? You may not remember what I said 1 year back. So what we do, sir, not this year, we do, the day we started webinar, we publish our report card. Okay, what we predicted last year same time and what exactly happened. And so you can see what we predicted, and we are very confident what we predicted in the beginning of 2024. We believe that more or less market is going to behave on a similar line. Dr. Sarang sir is saying, what is your strategy on increasing allocation in a portfolio stock which is moving upward and we have strong conviction? I want to average up and increase allocation in high conviction bet stock so that I can make bigger gains in the stock and overall portfolio. Dr. Sarang sir, it's a brilliant strategy. If you're convinced of your strategy, please, you are convinced of this, please go ahead and do it. So what you are asking, very rarely I come across this question. Normally I get a question on the downside, averaging down. You want to do averaging up, which is a very good strategy. I must tell you that. Do not, I again repeat the Peter Lynch ka statement, water the flower and cut the weeds. Am I right? And you are doing exactly the same. So high conviction, high bet stock, please go, because your exposure is increasing. So when the script actually moves as per your expectation, you make very big money on that company. Large money paisa banta usme. And I'm very happy, Dr. Sir, Dr. Saab, that you've asked this question. And I think it will also send a message to other people also, those who are listening to this webinar, that this is the way you can create wealth. So perfectly right है sir आपकी strategy. Abhishek sir is saying, can you please explain the difference between the valuation and growth and which strategy we should follow in the current scenario? So Abhishek sir, in the beginning of 2024, we said that I think the value strategy should perform well as compared to the growth strategy. What is growth strategy? The growth strategy is nothing but the company may not be making profit, but uska top line growth ho raha hai, so then eventually you will think it's like a startups and so on and so forth. Am I right? Some of the fintech companies, where you believe that this company will keep growing at such a great pace that what looks very, very expensive today will become reasonably over the years. And that's the growth strategy. That means you are betting on the growth of the company, which is going to grow substantially, and hence you are willing to pay very substantial premium right now, justifying the future growth. That is the growth strategy. Like some of the fintech, and so on and so forth, they were incurring losses, but yet you paid that super duper premium in the anticipation that this company will eventually make money, and hence what looks very expensive will become value going forward. What is value strategy? Value investing, that company is making a profit. It may not be growing as much as the growth companies are, but the valuations are very, very good. And hence you see, so in the value strategy, the downside risk is low, but upside is also limited. While in the growth strategy, the higher the risk and the higher the return. So this is how the value and the growth. Growth is more, value is more established company having a sound financial track record and so on and so forth. And the valuations are attractive and hence you go into that. Growth strategy may be newly startup, doesn't have a great financial history, but the growth prospects looks extremely good and hence you want to bet on that. Chetan is saying, please tell about future of private banking sector. So I think the private sector banking are going through some amount of a rough time. And if you remember, this I made a presentation to our PMS customer when this RBI came out with the MPC, Monetary Policy Committee. So if you look at the incremental lending, that has not gone as high as the deposit incremental. And that does not mean that the NIM could come under pressure for the banking sector, especially on the private. And they were really commanding a very rich valuation at that for some point of time, where if you look at the price to book value was very, very, very high. So I think some of this, or many of them, not I'll say all, but many of them private sector banks may underperform in the foreseeable future. Second, there is a technical reason why they may underperform is basically purely because of the FI seems to be heavy sellers on those. Maybe they are locking in profits and so on and so forth. And that's another reason why they may underperform in the near future. And then, of course, we need to wait for the, maybe we need to wait how the new data comes in. And maybe by mid of 2020, we need to again revisit how private banking sector can perform. But overall, we believe that this sector may not be the outlier in 2024. That means it may not be outperformer overall in 2024. So our sectors that we believe should do very well in 2024 remains the same. If you remember, pharma, capital goods / infra, railway, and the defense. And we continue to believe these four sectors can outperform significantly in 2024. Jitin is saying, being a cycle industry, when to exit from tire industry stock? Is it based on earnings or based on increase or crude rubber price itself? So Jitin sir, there are various factors. So if you look at most of the tire companies, they don't make money. Sorry, that's not the right statement. The most of the revenue comes from the replacement market. It doesn't come from the OEM. So if you look at it, some of the companies will get more than half of the revenue comes from the replacement market. Now, replacement market has a different kind of a logic altogether. Am I right? Replacement market is also a function of cheap imports, infrastructure, people spending power, and so on and so forth. So that's the thing. So of course, it's a commodity business. Remember, it's a cyclical, it's a commodity business also. Do you know in your car which tire is there? I don't know. In my car, कौन सा tire है मुझे भी नहीं मालूम. Actually, let me see if I can see in my photo which car. But how many people know? चल, let's do then one thing. How many people know कि कौन सा टायर लगा हुआ है उनकी कार में? मेरे कार में लगा हुआ है. एक सेकंड ना. It says PT, but I don't know which car is there. No, I'm not able to figure it out. Sorry, I'm not able to figure it out. कौन सा है इसमें? नहीं, I don't know what is this. I think it's a Pirelli. It looks like, I don't know. Okay, I don't know which car it is. So basically, even I don't know what car it is. So normally people, so what I'm trying to say, it's a more of a commodity business. Despite company do have a brand, it's more of a commodity business. So don't basically think that it's a branded business and wo hoga. No, in my car it's a Pirelli, yes. It's a Pirelli, is a tire that has been put. Okay, so it's a commodity business. I think almost each and every tire companies in their post December numbers has given a very robust outlook. They all saying that medium to long term outlook looks extremely promising. And of course, the input cost pressure is also not there. and that's another advantage. So right now, it looks like tire companies should do reasonably well. And if you look at, I think Karan has made back-to-back stock of the one selection, and both has been the tire companies. So overall outlook looks a little promising at this point of time. Aftab, thanks for being our member and guide through this journey. I have one question. If we have invested amount unperiodically over a period of a year, is it correct to assess the performance of the portfolio in terms of XIR or absolute return? Sir, XIR देखना पड़ेगा. Absolute return मत देखिए, because you've invested in a various point of time. So XIR is a better method. Also, for example, if XIR return of 1 year old portfolio is 20% and XIR of 5 year portfolio is 20%, is correct to assume the performance of both the portfolio are same? If XIR says both 20%, that yes, both are same. In fact, you should give more weightage to the XIR of 5 years. Why? It's very difficult to sustain 20% year after year for 5 years period. So I would say the 5 years 20% CAGR is much better as compared to 1 year XIR of 20%. So yes, in terms of value, both are same, but I would give a better weightage or better credence to the 5 year XIR of 20% over 1 year XIR of 20%. Prafulji saying, as you rightly said, retail investors like us do not have resources and wisdom to judge whether a stock would be keep delivering on a long-term growth rate. Is it good strategy to follow buy and hold as per Mojo calls in momentum now stocks? My suggestion would be yes, sir. Please do that. Some stocks, as you are aware, do not have the best quality in them. What should be the one do? Should we avoid Mojo one stock in such volatility? Many thanks. So, sir, it's a part of the strategy only. See, we all know that Mojo one may deliver some company may not be great, but they could turn out to be a better capital appreciation and the quality may improve over a period of time. So, if I have to basically make a strategy on based on Mojo one, I don't invest on based on Mojo one. I'll be very upfront with you. But if I have to make a strategy, then I'll say, okay, what is my risk capital here? Okay, and I'll say, okay, how much I'll put in Mojo stocks, how much I'll put in turnaround, momentum, and reliable. And based on my risk appetite, I'll see it. And then I'll not basically overlap with this each one. Each portfolio is a separate. And each portfolio has a job to perform. Am I right? So my turnaround should have a job to perform to give me higher returns for the amount of risk I'm taking. Or for example, what we call momentum now. And hence, and then I'll decide how much I should allocate to that company or that portfolio. Okay. And that's how you should look at it. Same way, reliable. Okay, which will not give me super duper returns as compared to as good as what turnaround or momentum now may give. But it will also protect me from the downside. Am I right? And now you write a very right question. During volatile time, what should you do? So you should always adjust your exposure based on this. During volatile time, I would not be comfortable putting too much money in momentum now or turnaround. I'll be very honest with you. But you may be comfortable because you can afford to take a risk. Everyone has a different risk appetite. So, but if the market is in a good shape, then I would rather allocate more to the momentum now and turn on, because then I have a high probability of making money. It's like, just give a cricket parlance. Depending upon what kind of pitch is. If the pitch is turning very badly, then you said, okay, let me play safe with the spinners, but let me take on the fast bowler. But if the pitch is bouncy and the ball is coming very quick, then I would basically prefer to play safe with the fast bowler, but I can take my chances with the spinner. So you have to keep readjusting your allocation based on the market situation. Right now, market does look little volatile. So maybe you need to basically readjust your allocation to the momentum now and the turnaround candidates. Frank is saying superior data just came out strong on the upside and all Asian futures are down. Substantial rate cut in May also been dashed and chances have gone down to 26. How will the Indian markets reaction? How do you observe this? So, sir, Frank, I did discuss in the beginning of this webinar about the India CPI, and I think you are referring to the US. See, markets, there is a huge debate happening when would the rate cut would happen. In the January, there was a almost certain that in the March rate cut would happen. Now we are saying in May also the chance has gone down to 26%. Maybe so. See, I think that the employment data that came out last Friday, I believe, is very, very strong, and I think that will further delay the rate cut. So my sense is that, and we stick to our guidance, which we have stated in the beginning of January 2024, that first rate cut has to come on 22nd June 2024 from the Fed, and we stick to that guidance, despite we were the contract to the overall market, because everyone that time told us that you are fool. Why? Because everyone believes that March mein hone hi wala hai. But we go by our own data analysis. We don't get colored by other people's opinion. And my sense is that June should be the good time where Fed will eventually say, okay, enough is enough. Now time has come for us to cut the rate of interest. So index futures are down substantially. I don't know how much they are down. Are you saying substantially? Matlab, is it too much down? Let me see as we are speaking. So let me just see Wall Street Journal. So, okay. No, it's S&P 500 futures down by 1.6%. And Dow Jones is down by 1%. Yeah. So you are right, it's down. But will that have an impact on the market? I think market will look at its own logic. What are the India's fundamentals? What are the valuations? What kind of growth in earnings that will happen? What kind of political stability that we are talking about? Because we do have an election before the US election. So there will be some impact, sentiment, very short term of the US market. I think Indian market will move as per its own fundamentals rather than taking cue from the US. The gone are those days if the US squeezes, India will catch a cold. वो होने नहीं वाला अभी. I think वो अभी थोड़ा इंडिपेंडेंट हो गया है, थोड़ा डीलिंक हो गया, डीकपल हो गया हुआ है. Santosh, please give your outlook on medical diagnostic company, says. Medical diagnostic company. I mean, you mean to say that the likes of Dr. Lal and Metropolis and so on and so forth. I think the pricing pressure is definitely off, and more people are spending more money on diagnostic services. So, and there is a consolidation happening where the smaller players are joining hands with the larger players. So industry outlook's a little promising. I don't know what will happen in 3 months and 6 months, but if I expand the time rather than 1 or 2 years, I think it looks like extremely promising. So, and the competition, which was the competitive pressure which was there with likes of 1MG and so on and so forth, they reduced the rate so substantially that created some amount of pressure, but I think that has gone away. So it's promising. From 2 years perspective, I think it looks very, very promising, medical diagnostic company. Bhavik, if I am following model portfolio, should I need to worry in 2024? Absolutely no. I make it loud and clear. If you are following model portfolio, you don't have to worry anything about this one. Why? Because our IP is taking care of that. Whatever needs to be done will be done by our IP, and hence you don't have to worry at all. Those who are PMS customers, do they need to worry? The answer is clearly no. Only worry to those who are doing based on tips. Those who are listening to some of the so-called experts on the TV channel, and we recently heard how that so-called experts comes on TV channel, give you tips, and they make more money than what you make. Am I right? So there where if you are not very sure what reason why you got, I don't want anyone to become an Abhimanyu. What is Abhimanyu of Mahabharat? He knew when to enter, he was not aware when to exit. And that's why you get killed in the battlefield. And something similar happens with our investors. So as long as you are taking a professional advice and that advisor is good, you are in a safe hand. The moment you want to go on your own, do it yourself, then it means you are inviting trouble for yourself. Rajesh, Mohit sir said that he preferred momentum stock. He said momentum stocks do very well in bull market, in bearish market also. Sir, to be very honest with you, it's not necessary that Mohit and I always need to agree on something. We many times agree to disagree also. So he may be right and I may be wrong. He has a different comfort level. I have a different risk appetite. Am I right? We are two different individual entity, and that's why we are there. Because there is a very famous saying, which says that if you and I both agree, then one of us is unnecessary. Am I right? Because that's where the things. So Mohit may be right, I may be wrong, and I'm humbly accept if I'm wrong. But I don't have a comfort level. My sense is that in various market, momentum, and I don't know what Mohit has said. I'm assuming that what he is saying is right. But if Mohit has said, so be it, I would not be comfortable. Will I change my opinion because Mohit has said? Answer is no. You are an expert on market already now, so please think of starting taxation service. सर विनीत सर हम लोग मार्केट के एक्सपर्ट हैं. टैक्सेशन के लिए तो सर आपको कोई सीए के पास जाना पड़ेगा, बिकॉज देयर एक्सपर्टाइज लाइज देयर. वी कैन नॉट डू टैक्सेशन सर्विस सर. वी आर नॉट नीदर वी हैव ए कैपेबिलिटी नॉट वी हैव ए डिजायर टू गो इनटू दैट बिजनेस. वो हमारे every business has certain core principle, core philosophy, core objective. उसमें ये टैक्सेशन सर कहाँ से बैठेगा हमारे लिए? नहीं बैठेगा सर. My advice would be, and see, it's not that those who are good in taxation are good in equity market and vice versa. We are neither expert nor we claim to be expert in that field. And sir, we will never go into taxation service. Prasan Very Sari saying, pardon me sir if I have pronounced it wrong. Railway companies are mainly owned by government. Will they really perform? Of course they should. Why should they not perform? If you look at my data on the PAC index, it did extremely well. Can you see my data? Is it visible? You look at this PAC rate, this one, 14%, 13.4% returns. They did extremely well. It's not that they are doing well in 2024. They did extremely 2023. See, sir, the government of India wants to spend a huge amount of money on the railway, on the tourism. If you happen to listen to the interim budget also, well, Ms. Nirmala Sitharaman harp on this railway and the tourism. I think the budget is not a constraint. The money is not a constraint there. And government will do whatever needs to be done. Whether it's the freight wagon, which we needs to get modernized, whether it's a metro, which is the cities which will have metros now. See, Bombay had only one metro. That was from Ghatkopar to Andheri. Now 2 metros already started running. One on the highway, I think that starts from Dahisar to Andheri. Another one also starts from Dahisar to Andheri from east and west. So that Bombay has an east and west concept. Then another metro is going to go live from RA Colony to Bandra or so and so forth. So complete Bombay in next couple of years will have many metros running. Something similar happening in smaller towns also. So that's one. Second thing, government wants to increase the speed of the train from semi speed to a high speed kind of a train. The government is spending huge money on bullet train, the signaling system, the expansion of the railway tracks. Where there are only 2 tracks, they want to increase it to 4 tracks, and so I think the money is going to be spent hugely on the railway, and that's one of the reasons we do believe that railway as a sector for 2024 should continue the performance that they did in 2023. So they will continue to outperform the broader market. No need to worry. On the contrary, since it's a government money, you don't run into a problem of corporate governance. And I think under the incumbent government, I think these government companies have become more efficient in terms of their. In fact, I was happy to know that they also started conducting now the conference call and making presentations, which was not the case previously. They were little investor shy in terms of this one. Now they're becoming investor savvy and they're making presentations. They also understand that value creation, they can do it by interacting more closely with the investors community. So there is no, and right now there is a general belief that the incumbent government may continue to form the government as and when the election takes place. So hence, I think the story will further continue going forward. Santosh, I'm high risk investor. As you say, we can expect 10 to 15% from PMS. If suppose we invest, sir, I never said we can expect 10 to 15% return. So let me correct here. Santosh ji, as a rule, as a SEBI guidelines, we are not supposed to give any indicative returns. And we will never ever do something which is not in line with the regulator. So hence we have never, what we had must have said, the market can give you 10 to 15% return and our endeavor is to outperform the benchmark. But we never said we can expect 10 to, that's the thing. If suppose invest good amount in PMS, can I make retirement comfortable if withdraw 10% every year after completion of 3 years and keep 5% of growth money? That, what is your take on this? Would you good strategy for retirement? So Santosh, on the face of it looks very exciting and very good actually strategy. But should you be dependent on your retirement money after 3 years? If you would have asked me after 10 years, then yes, I would have said yes with a lot of confidence. After 3 years, just to live on retirement, it's a little risky strategy, Santosh. If I would be in a place, what I would do? First, I will make a corpus for myself for my retirement money. So, मैं 3-5 साल का जो पैसा मुझे चाहिए every month का, that I'll take it out and I'll put in a fixed income instruments irrespective of what happens to the market. The balance is my growth capital, and that I will put it. So that means I don't have to take out, because the moment you take out the money, keep withdrawing money from the PMS, then what happens? The power of compounding somewhere get defeated. Am I right? So I would not like to do that. So what I'll do? I'll first buy a peace of mind because I'm retiring. So what I'll do? I'll first create a corpus for my retirement. वो पैसा I'll put in a fixed income instrument where मेरा घर चलेगा irrespective of what happens to the market. If there is a black swan event also, I don't have to bother about it. And then 3 या 5 साल, whatever your comfort level would be, the balance amount. So for example, just to give an example, suppose I'm going to spend 1 lakh every month post retirement. I'm just giving an example. Okay, आपका 50,000 होता है, 2 लाख भी हो सकता है, whatever the amount you said. I'll multiply by 3 years, 36 lakhs. So the 3 years, 1 lakh per month, 36 months, 36 lakhs. 36 lakhs I'll put in a fixed income instruments for my 3 years का retirement money. उसके बाद I will put it basically everything else in my PMS and let that power compounding comes. Now the question will come, उसके बाद क्या? Am I right? The 36 lakhs will also earn some income, and then after 3 years, you say, okay, how much money do I need for next 3 years? You take out that money, put in a fixed income instrument, and then let the money go. That's the way you can keep the cycle. But I would say not do that. Sorry, I would say put it for 60 months. That is 5 years, and then apply that logic every 5 years. That's the logic you can keep it. Of course, I'm saying I'm not applied so much thought in it, but this is the way you can apply it. 1 lakh per month, 5 साल, that is 60 months, 60 lakhs put in the fixed income instrument. Post retirement, am I right? Post retirement, 5 साल तक आपको टेंशन नहीं उसका, irrespective of what happens to that. And let that 5 years, the equity will give you good returns, reasonably expected. And PMS should outperform that benchmark, and hence you will have a good corpus. And then you can revisit, should I now put this strategy of what you are saying about taking out the money and put, let the power of company works, or I take out lump sum money, again do something similar for next 3-4 years, and let the other capital keep compounding at a regular interval. So there are parameters combination we can look at it, but I would first right now go with 5 years, and then after 5 years I'll revisit what I need to do. Trust all is doing well. Manish is saying, please explain something about fintech company, sector performance, present or future for fintech. Manish ji, fintech looks extremely promising. I must say it looks extremely promising. Why? Because finance is a need, whether we like it or not, and technology is the name of the game. In fact, the fintech is going to completely transform because of the artificial intelligence. An amount of work that is being done, an amount of adoption of that artificial intelligence happening within the fintech space is amazing. and hence the future is extremely good. Now, I'm not saying all fintech will do well. Why? Because some will not be able to catch up with the change that is happening in the AI, artificial intelligence. So there'll be some laggards. But overall, I think fintech will give tough competition even to some of the NBFCs and banks. I must tell you that. Why? Because they don't have to unlearn anything. While for banks and NBFCs, they need to unlearn many things. Am I right? And fintechs will start from the scratch, but they will come with a new thought process, and that could be the game changer. So fintech has a very bright future, very, very bright future. Prakash thinks, if I want to switch to PMS, should I sell my personal portfolio at this market or wait? Sir, what you are doing, you are moving from equity to equity. And hence, and by moving to PMS, your money would be, has a higher probability of doing better as compared to your personal portfolio. So my advice would be, please sell your portfolio, give that money to us and move to the PMS. I don't know why you want to wait. There are two options. The market can go up. If that happens, your PMS portfolio will also go up. If market falls, your PMS portfolio will also fall, but likely is that it will fall less than what your personal portfolio would have fallen. So in both the cases, there will be a win-win situation for you. So don't wait for the market. But if you say, I want to put fresh money, then I would advise, okay, please stagger over a period of 2 months equal installment. In other words, invest today, after one-third amount today, one-third amount after 2 months, another one-third amount after another 2 months. That's the way you can look at it. Sundara Raju, sir, when you and Sri Mohit are following same IP for market, how one is right and other wrong is so in sometimes. Sir, the IP is the same. There is nothing that Mohit has a different IP or I have a different IP. IP is the same. What we are saying is the view. Mohit view is that that someone is claiming, I don't know whether Mohit made a statement or not, but he's claiming that momentum should also perform well in the bearish market, which I'm not so sure. Of course, I have not worked on that IP, so I would not know, but Mohit would know. That's why I could be wrong. But I don't get a comfort level to invest in momentum now when the market is bearish. That's what I'm saying. IP is the same. There is nothing called this one. We are two individual. We two different individual having two different perspectives. There's nothing wrong with that. Am I right? And that's how it is there. Probability of Mohit right is much higher than probability of me right. Why? Because Mohit actually worked on that Mojo 1 IP and made it live. I was not part of that Mojo 1 IP, and if you would have remembered, in none of the webinar I was there when the Mojo 1 was presented, because that's completely, because I moved to the other side now. I moved to the PMS side, and hence I don't have much clue about what is happening. I'm just saying based on the common perception or common logic or common sense that momentum should do well when the markets are bullish. Momentum should not do well when markets are not so great. In fact, on Thursday, if I don't know whether, sir, you are part of a PMS or not, but Mohit and I are there on Saturday, on this Friday at 7 p.m. or for our with in front of PMS customers. If you happen to be PMS customer, please ask that question again to Mohit, and let's see what Mohit has to say on the momentum now, whether he should be, my view. Let Mohit also clarify his view on the momentum. I've been informed by Amil that yes, we do have more questions, but the time is not there. We are running short on time. Fortunately, we could cover many questions today. Why? Because my presentation was only for 5-7 minutes, and hence almost 45-50 minutes we could cover many questions. Thanks everyone for taking time out and attending this webinar. It has been a delight to interact with you people. I always keep learning something new. Please keep attending these webinar clips. Also help us to understand what queries that you are bothering with, that also help us to understand what we should be covering in our webinar. So that's why also it's a two-way street. So the way you learn from us, we also learn from you. So let that two-way traffic continues. On Thursday, this time for a change, not on Friday, but Thursday, I'm going to do future trend analysis. And Friday, normally we do PMS webinar on Thursday, but for a change, this time we are going to do on Friday. Why? Because Mohit is also be part of that webinar. So for everyone, Thursday I'll be in front of you. Oh, PMS customer, I'll be there with you on Thursday as well as on Friday at 7 p.m. With this, good night, take care. Be remember, market is going to remain a little choppy. Please play your cards extremely cautiously.